Well, good day, all. Ira Epstein, and here we are. And it is Thursday evening, October 5th, 2023, 6:40 p.m. Central Time. I'm getting ready to finally relax, watch the Bears. Will they stay winless through the season? You think I'm laughing. I'm wondering about it. I don't want any team to have what's happening. It's demoralizing. On the other hand, there's a reason they're this bad. I think it's 15 losses in a row or 14 in a row. That's pretty hard to believe on a pro team. And it's unbelievable. But I had my share of losses today. I was dead wrong I didn't think gasoline was going this far down, heating oil this far down, energies this far down as a group, period. Okay? I didn't think corn was going to rally back today and be in the 487. I thought it would crack through the 481. I was wrong today. I had a trifecta. I tried the short side of the eurocurrency, and before it got anywhere near here, I said, I am wrong at 20 points. And I said, it's very clear to me what's going on. The market is caught right now getting ready for the jobs data and caught in what's going on in the world of interest rates. And it's uncertain all of a sudden. Tomorrow could offer clarity. Why tomorrow? Because the Fed looks at the jobs report. No ifs, ands, or buts. And they're going to be looking at that, and if this number's again strong, they got to be scratching their head. Now, we understand, that's you and me understand, that even if the Fed goes up another quarter point, it's the market that's doing the Fed's job for it right now. The marketplace is driving and steepening, not the word inversion anymore. Steepening. You've left that world of inversion. Now it's a question of when the twos get back under the tens. That is why you keep hearing the word steepening. Do you remember the inversion? I predicted you'd get up at one point, 100. Said that, must have said it a lot of times before it happened. And it got there, got to, I think, 105. And that was the objective on some long-term charts that I had. I didn't know it would peak out there, not even remotely. That was the upside target. Well, I had some downside numbers that could happen in energy. It surpassed everything that I had. So the markets went into a free fall, and it happens, folks. And here's a problem that I'm learning about weekly charts. They're wonderful for concept trading. They're very hard to work with in real trading. And I've known this, I've been in this 54 years. I'm a registered broker. And it's hard. If you trade them, understand what you're doing. It's much easier on daily. Yeah, you're going to get caught in a trade here, there. It's just nature of the beast, okay? But because it's a daily range, it's nothing like these other charts that move lumbersome. Just keep that, and please remember what I'm saying. Very important. I have people writing me about it, and I appreciate all the words, some giving me ideas that I will try out. We built an AI program, and we have been using it. And we went back, not because of these trades. We're back on it because there's another service that I'm looking at. Do I want to give it to the public? Do I just want to trade it myself? I don't know yet. But it's about momentum, and I'll leave it at that. And, your ideas are helpful. All right. Oh, another idea. What do you think is going to happen on the jobs report? Write it. Put it on the YouTube. I'd like to hear what you think before it happens. Don't tell me after. Lower highs, lower lows. You're basically just staying in the E-mini, the weekly, underneath everything. You're still bearish. And maybe before I get too far, this is the time that I remind you my special report on stock indices. It's on the website right now for you to look at. What do I mean by that? I did something different. Instead of looking at the bar chart, I went and I looked at the 30, the 15, and the 5-year seasonals on a daily basis, going back years, but I bring you into from October 4th on all of them right into the end of the year to give you an idea with that smoothed impact, what they have done from here going forward. I think it's fascinating. And I did it in all the major indices, the big four. So if you want to see it, it's only up on my website for 3 business days. I will let it go through the weekend. You're hearing that from me now. Move your cursor up to the top, give it a click. Go to iraepstein.com under the word research. It's there. If you're on my mailing list, I've already sent you how to get into it. And that's it. After that, it's gone. My reports, I want them 3 business days, but I sometimes put them out so you can get a weekend look at it because I know a lot of people like to do that. Okay? All righty. So let's take a look at what we've got. You can't say anything on this chart looks bullish. If you do, I don't know what kind of chartist you are. You're measuring things that I don't think any of the rest of us see. The pattern has been clear. It's lower highs, lower lows, and you haven't even gone to a stall. You've had bearish crossover where the 18-day average in red got under the 100. The market came down, and as I predicted back here, I said, I don't like to tell clients to go short under the first challenge of a 200-day average or a 100 for that matter. They're big moving averages. If you think about it, this is a 1-year average, basically, of what's going on. When you look at a weekly chart and you see a 200-week, that's 4 years. I mean, it's an important number. And if you were to ask me, why did the market sort of stop here? That's the reason. Now, when I look at Bollinger Bands, if you get bearish numbers tomorrow out of the jobs report, whatever that number would be or the reaction to it might be, you could be going back to the 4,200 level. Many people have been talking 42, 4,100. Do you remember, please do remember, I know your memory's not that shy, back here, April, May, me included in that. The 4,200's a resistance zone. 4,200 resistance zone. And then the market eventually cleared it, late May, and kept itself going. I hope you remember that because that's what was going on. Well, what was resistance on the way down sometimes becomes support. So you go back and you look at the chart, and that could be why you're fighting a battle right in this general zone. That's about where I'm going to leave that. In momentum, you're flirting, not there. You still have the bearish embedded reading, which means the red and the blue lines, they're called the K and the D. It's been going sideways under 20 until the red closes over 21. The pros are still likely selling the market. Get a close over 21 and you could start a short covering rally that the first objective would be wherever the 18-day average is, unless you went back and took out the most recent low. It's a pretty simple rule. When you look at the NASDAQ, it's been out of that for a while. I have been saying in my morning reports for my subscribers, this is the one you don't want to be short. Before it goes down and takes out this low right here, most recent low, it probably is going to the 18-day average of closes. I have not said that in the Dow. You have the embedded reading. It's just like the S&P, and the Russell is identical. So these markets are there. But when you see that special report I wrote out, and you see these days right here, I think your jaw is going to do this. It'll hit your chest. That's all I've got to say. All right. As we look at the notes, an event happened. Let's take a look. Yesterday. This is where you finish. Yesterday. Take me to the well. You lost the embedded reading on the close today. So unless you go back down under this low right away or re-embed tomorrow, the odds favor you're going to make a run at the 18-day average of closes. Let me come over here and just catch that the right way for you. And let me bring that right in. There you are. That's where you're at. I hit the wrong button. Sorry. That number is going to fall a bit. This can rally. And obviously going into the all-important jobs report, you're setting up what's it going to do. You never did embed like that in the 5-year note. Different game at work right there. In the dollar index, you're losing the bullish embedded reading. So everything's flip-flopping all of a sudden, but stock indices. The dollar weakening, the euro market turning its butt and saying, I don't want to be short anymore. I saw that happening today. I go, you're not going to get me. And I told my traders right away, out, out, out. Don't wait. And that was a while ago now, so I'm happy. Could it re-embed? Absolutely tomorrow, but it's not embedded right now. It's good to be out of it. In the British pound, you lost the embedded reading. You could easily be going back to the 18-day average of closes. So the word is maybe the dollar down and maybe the other things going up. You went back to challenge the upper Bollinger Band in Bitcoin, and again, that stiff resistance at the 100-day average. I have been saying you don't want to think the short side as you're over the 18-day average, but it's hard to get long here because the market's right in a resistance point. The differential between Brent and WTI, one of you wrote me and I appreciate it. This is not a ratio chart. This is, I set it up. It is this minus that. Minus is the price. It is just the dollar difference between the two, not a ratio chart. So I appreciate your writing, and I thanked you a lot when you wrote me, but not right. It is a ratio chart, and that's what I like to show. I'm not dividing the ratio. I'm intentionally looking at the differential. Do you know why? Because if the differential just keeps coming in, by the way, it's been 104 for a while. I don't understand why it is not changing. I'm going to look into that. It just doesn't make sense. Why each day? Let me just see if I can get that. Daily was 100. Daily was difference here. Take a look at these, all right? It's the time, I understand. The trades, 104 on each one. Okay, there's something not right with the chart. That isn't right. I will find out what the difference is. I looked at the math today. It's closer to about $1.80, something like that difference. Let me get back to my train of thought. I knew something was wrong. It can't be 104 every day. Both of these wrong. I'll fix that. If you get into that dollar zone, U.S. crude isn't as favorable because of shipping, other things that go on. Brent will pick up a little more of the business. Now, what has happened, if you looked at today's trade deficit in the United States, you saw that it narrowed in from the prior, 65 billion, all of a sudden, the market's like 59. Please understand, when these numbers were taken, and those numbers that you're getting don't include September, this was the rally that you were looking at going on. This was the August timeframe. And I know I'm in Brent, so don't worry about it. They went the same way. This decline has yet to show up. It's probably 2 reports away before you see that. And you can see here, here's D's crude. We should move to the D's already. This was that rally for the August trade deficit. And the U.S., being the monster exporter it is of crude oil, got the benefit of that. It's going to lose that benefit in 2 months because you have been down for this whole month of October sharp. You've gone from 92.40 to 80.61. So every day you're doing that, you're losing that benefit that you had. You get what I'm saying? In heating oil, I don't know where the market's going. I think it's a market just plain out of control at this point. It's straight down. You rarely see moves like this. Mark it on your chart, print it, put it somewhere. These things can and do happen. Now, I will go back to everything I told you. It will still most likely not have 5 days in a row under the lower Bollinger Band, but that band is falling. Prices can be down, but you're going to move to there, and you've never embedded during this whole thing. An unusual circumstance. Natural gas breaking out to the upside. This now could become a big bottom that we're looking at. I've been talking in my morning subscriber video and pointing this out to traders that I suspect we've made a low of importance in that gas unless and until you get back under the 277 level. That's important. What's the next resistance since you're up and over the Bollinger Band and up and over the 100-day average? It's got to be the 200-day average sitting there at the 332 area. So that's just something that you got to think about as you put this all together. So please, take a look at what's going on, understand where you're at in the markets, understand the importance tomorrow of the jobs data, and if you want to see that special report on the stock indices on that day-by-day basis of seasonality, please give it a click up there, go to it, or iraepstein.com under the word research. You have a good day. I'll see you all tomorrow morning.